Once again, the government rides to the rescue here. That's good news for the people being rescued. But what possible ramifications might it have more broadly?
Yeah, I think, David, this is a great time to step back and see as to how low the bar has become now for government intervention. Now, of course, the banking sector is always a very sensitive sector because of the risk of a contagion. But what strikes me here is that how far we have come over the past few decades, where you get more and more stimulus, more and more government intervention, and at the same time, you have a slump in productivity growth. And I think that this is the point that is very underappreciated. At the surface, it seems as if the economy has once again survived a crisis, and here we are. But I think what we forget is that there's a price we are paying for this, that because of this constant government intervention, we're keeping alive a lot of zombie companies in this country. And the number of startups, in fact, over time is going down. Why is this happening? This is happening because we're keeping a lot of deadwood in the system. The number of zombie companies in America today is nearly 20% of all companies can be classified as zombie companies. That number used to be barely 2% in the 1980s or so. So that is the contradiction here, which is that we do not want any pain, and that's completely justified. And we want the government to come to the rescue, but we also don't like the economic outcome where we have low economic growth, lesser and lesser living standards. And that I trace back to the fact if you have low productivity, that's what you will get. And the low productivity is the direct consequence, I think, of such expansive government intervention.
So, Ruchir, no question we've had a lot more government intervention, no doubt about that. But there's another factor as well. We've had very, very low interest rates, which has allowed some of those so-called zombie companies that basically can't afford to service their own debt, survive. As the Fed has moved to a higher interest rate regime, might that help some on the front of zombie companies, the allocation of capital, and therefore maybe ultimately productivity?
It could be, but so far there's very little evidence of it. Look at the default rates. The default rates are so low in the country today. Now, as you know, that in capitalism, having some default rates is a very essential part of it. So this goes back to what sort of system do we want? So the default rates in the economy today are very low. Now, all this sounds almost a bit masochistic. That do we want more pain? Do we want more companies to go bust? Well, if you want capitalism, that's what you should be prepared for, because a capitalist economy should be a dynamic economy where you have much greater company creation, you have a lot of the deadwood that dies, and you don't have the creation of too many monopolies or very large companies that benefit also from very low interest rates, as we know. So I think that it's that contradiction that we can't seem to handle, what we want and what's the outcome that we're getting.
Ruchir, do you think there might be a way to engineer this in such a way that you take away the worst of the pain and yet you still have some discipline in the market? And let's take the example of Silicon Valley Bank. To be sure, all the depositors were guaranteed, they were made safe, but the bondholders were wiped out, the shareholders were wiped out, management was wiped out. It's not exactly moral hazard, is it?
But as I said, that looking at each individual instance almost seems justified. I'm looking at the cumulative effects here, that if you have so much government intervention, which is constantly at hand, then what are the consequences of that? So each individual instance, it's very hard to argue against because no one likes to see that kind of pain. But what is it that we are seeing? We are seeing the size of government stimulus over time having increased massively. If you look at each economic downturn, we have seen the size of monetary stimulus increase a lot, as we have seen every economic downturn. And we've seen lesser and lesser defaults because often the government's intervening also in a non-monetary and a non-fiscal way, like this sort of did just now.
So put this in a larger context. I mean, it's not just we call it bailout, don't call it bailout, but whatever happened with Silicon Valley Bank, it's not just that. At the same time, we're moving, at least stepping into the area of industrial policy with things like the Chips and Science Act and federal government putting money into things like semiconductors. Are we overall in our society slowly, maybe not even slowly, moving away from a true free enterprise system to something that's much more statist?
Yes, I think that's already happened. All the evidence suggests that. Look at the share of government in the total economy. That's keeps going up over time. No major developed economy since the 1970s has ever run a sustained fiscal surplus. Everyone's used to now running only deficits because we think deficits don't matter. And my point is that all these things do matter in an insidious way, that you're undermining the fabric of capitalism, you're undermining the dynamism of capitalism, and the result you have today is something which is much close to statism, as you point out as well. I think it's correct. After all, industrial policy is something we so associated with China in the past. So I think that this is the big change in America and the consensus out here, that there's so much more that the government is doing in every area. There's mission creep in the Fed as well, in terms of what all it's doing. So that is my central point out here, which is that productivity growth in America, if you look at total factor productivity growth, has fallen to just 0.5% a year now. That number used to be 2% or more. So that is the dramatic change that we have seen.